Today we're going to be going over my Roth IRA portfolio for month end of September 2024. This month has been interesting to say the least. I feel like I say that every single month, but it's true. You can see that we recently hit the threshold of $15,000 in the account, which is something that we've been hovering around for a while, coming very close to, but stock market had other plans for a little bit. We finally hit that point, so let's look at how that happened exactly. So let's look at a 3-month chart, kind of get an idea what's going on. So we did have a huge rally coming back in July, and you'll see it says 15,000 right there. We were in the 14,000s. It's just because I've accumulated more deposits in this account, so it's going to show that it had a different value at that time. So we're in the high 14,000s here, and then we saw this significant drop down to here. So even with my higher deposits, we went to 13.5. I believe it was more around 13,000 at the time, but this had, when the market was crashing a little bit, there was 6% down in a single day, which you can see kind of here, just making this incredible drop. Japan, yen trade kind of situation going on, interest rates over there affecting our market, a lot of speculation going on with tech stocks at the time, thinking maybe they're overvalued, maybe we've extended them too far. And that might have been true, but regardless of that, the market still decided, hey, we're not done rallying, we're just going to keep pushing it further and further this year. And that's simply what they did. I mean, we can see this just fantastic rebound within the next month, bringing us in the high 14,000s, then another pullback, bringing us below 14,000. And that brings us now, and we're over 15,000. So you can see we've been playing with this point quite a bit. We can even look at the year to date to see that a little better. You can see we've been toying with the 15,000 mark for quite a bit. So we're at all-time highs of the portfolio, just about within 1% or so. Before we were up 10.14% since I transferred in this account, which was in May, and now we're up, it seems, 9.24%, which just coming from May, that's incredible. I mean, I'm fine with a 9% return for the entire year. So seeing as how we're only in September and we still got October, November, and December, we like to see that, especially because we tend to see stock market rallies more at the end of the year. That's just kind of what the trend tends to be. But who knows, maybe this year it'll drop 20% randomly and then we'll all have to celebrate and I can see my portfolio value just disappear. But hopefully that's not the case. But nevertheless, I did want to point out some interesting things that we did with this portfolio over the time of this month. I do want to note that I sold off my SPY position, which is interesting. So if you don't know, I have QQQM, lower expense fund compared to QQQ, but tracks the same thing. The NASDAQ 100. I have VOO, which is S&P 500 ETF. Then I have SPY, which is the most popular S&P 500 ETF. However, I decided to look more into the VOO versus SPY situation, and I just decided that I like VOO a lot more. And that's because of small factors, but I think they'll add up over time, especially as the portfolio becomes greater and greater in value. We can see here that I already do have a pretty significant position in VOO, but if we add up QQQM and VOO, it's not my portfolio value still, so I do have some pending funds from that sale, which we'll look at. But the reasons I decided to go from SPY to VOO, which is where I'll be putting my SPY position in, is two factors. One, VOO has a slightly higher dividend ratio. I mean, very slightly, within just fractions of a percent. But also, VOO has a smaller expense ratio than SPY. And again, that's just some fractions of percent. But at the end of the day, it just does kind of bother me because I'm not necessarily putting in more time for VOO or SPY and expecting to see different results. I'm just putting in the same amount of energy in both, and that is zero energy at all. I just put money in the account and give it to the ETFs. And the issue with that is, even if it's a couple dollars, that's a couple dollars that I could have. Why would I not just do that going into the future? Especially as we see this portfolio hopefully hit 6 figures within like 5 years or so. That's one of my goals. I mean, it's very important. We could see tens of dollars up to hundreds of dollars, and right now we might not be seeing that because our portfolio is still growing, but in the long term it's going to matter. And even saving that little bit amount goes back into investing in the account, and the compound interest on those couple of dollars is significant also, to say the least. So when those SPY funds settle, we're going to be moving those into VOO, and we will see that in the next portfolio overview at the end of next month. But besides that, we did have some significant news happen over the last month. We saw that the Federal Reserve cut the interest rate from, I think it was about 5% or around there, and dropped it by 0.5%, which is pretty significant. Everyone was debating whether it be 0.25 or zero point 0.5, but they decided to go 0.5, which indicates that maybe the economy isn't as strong as it seems. But of course, the the federal government's not going to say that, and they said that everything is fine, inflation is good, which seems to be the truth for the most part, getting in that 2% range, which is what we like to see. However, they were kind of dancing around the fact that unemployment isn't in the best situation. We're seeing it rise, and even though a lot of these jobs are becoming available, they're ghost jobs, which aren't simply available. People are reporting that their own businesses, but DoorDash drivers and stuff like that, kind of inflating a lot of those results. So we're gonna have to see how that turns out. I hope now that they've turned the tide on interest rates and the election's coming up, so they're not necessarily going to let everything crash at the election time. Hopefully that's going to bolster the economy up for just a couple more months, maybe half a year. And at that point, everything will kind of simmer, inflation will steady, and the job market will hopefully correct itself a little better. And I mean, a slight revision down isn't necessarily the worst thing, but hopefully it'll find itself in a healthy position and maybe stay where it's at, maybe get slightly better, but that's still to be decided. A couple tickers I wanted to look at today. I do like to note some important stock movements for the month. We're going to look at NVIDIA, and it's not necessarily just this month, but I was more as interested in the 3-month chart of this. So this might be not something a lot of people are talking about, but NVIDIA has slowed down significantly in its growth. You can see in the last 3 months, a whole quarter, it hasn't even gone up, it's gone down 1.81%, which is kind of crazy to think about. I mean, it seemed like in the last year and a half, you couldn't lose if you're picking this stock. You were simply outbeating the market at every single opportunity. I mean, look year to date, it's up. That's still crazy, 146%. But if we look at these longer charts, you're going to start to see what I'm talking about here. We saw this time where they're a gaming company, and they're kind of slowly growing up, and then they start pivoting to chips. And when the AI craze happened in about May of 2023 here, we can see that exponential growth of the stock. I mean, keeping in mind the stock split and all that, we went high 40s, low 50s evaluation to 121. So that's simply over doubling the value of NVIDIA, which I, personally think it's not sustainable. We're going to see that pullback, which I said a couple months ago, and it's kind of interesting to see that we're seeing that flattening of the NVIDIA stock now. So I didn't think it would happen when I was saying it did, but it seems like it did, and I think there's a couple of reasons to that. One, AI growth simply isn't sustainable. You can't go 100% on a stock that's already $3 trillion in valuation year over year and just expect that to happen. I mean, you're going to have the whole value of the US stock market if you continue at that rate. But also comes the fact that NVIDIA mainly sells to major companies, Facebook, Google, Apple, right? Those are the companies that NVIDIA is selling these AI chips used for generative AI and other AI features too. And once those companies spend their 1 billion, 2 billion, 3 billion that they want to spend, how much more money is in the budget for them? And that's a serious concern. And I feel like we're starting to see that concern. Meta's feeling the pressure. They've spent billions on these chips and not necessarily seeing the profit. Apple, new AI line, ChatGPT, they're working with, although they make their own AI chips with the A18, they're still working with a ChatGPT server, and they'll use these AI chips. And we're going to see if anything comes out of that. ChatGPT recently has pivoted to a for-profit focus, but they might have raised $2 billion revenue, but they lose $6 billion or so, incredibly losing money. And that's not anything good to see for a new company, but understandable. All this goes to say is that NVIDIA's main customers aren't seeing the rewards that they're hoping to see right away. And we're going to have to see how patient they are. Is Meta patient enough to continue to spend billions of dollars and not see those profits instantly in the next quarter, 2 quarters, or even year? What are the stockholders going to think of that when they see all this capital expenditure coming out and all you're doing is getting some emoji generation and nobody's using that, right? So it's going to be interesting to see how all these companies are pivoting their AI maneuvers and seeing what really comes out of that, if there's anything truly allowing more profit. So something like Amazon having more of their AI features help their sellers, that's something that they could look at. But I feel like a lot of these companies haven't necessarily found that value proposition for AI chips, and the person that will hurt from that if it stays that way is Nvidia. So it'll be interesting to see where they end up next month. I, of course, not praying on the downfall because a lot of people have Nvidia on their portfolio, but it's going to be interesting to see what happens nonetheless. Apple is another company I want to talk about in this last month. We can look, they're up 3%. Now, an interesting factor when it comes to Apple is that they released their new iPhone 16 line, and I finally upgraded this year. So I have the iPhone 16 and I've got to try it out. I have the iPhone 16 Pro. It's quite nice, definitely a great upgrade from my old iPhone 11 that I was using. But there are a lot of complaints and they're justified. So we saw that from going from the iPhone 15 to 16, minor differences. I guess all the 16 models now have the action button. That's cool. They have the camera action button, so you can instantly go to your camera. That's interesting too. But is that still worth the $1,000 to spend going from the 15 to 16? A lot of people are going to say no. And that's probably the right answer, honestly, because there's not that much innovation going between it. What we also saw with iPhone 16 is Apple's AI proposition. They released their kind of plan for all these AI features to come within the next 3 months, 6 months, even a year going out. But the fact of the matter comes that the new iPhone came around and it was advertised around AI features, and there aren't AI features on the device yet, which is interesting, and it's something that is annoying to me because I like to maybe mess around with some of these features and see if the value proposition is there, but I can't. I mean, they release things for like math notes on the calculator so you can assign variables and stuff, but most people aren't going to use that. I will because of my degree, but most people won't use that kind of thing. I mean, generative emojis people might use, but I don't think there's that much value. Photo searching might be interesting. I think the upgraded Siri is what a lot of people are looking forward to, but is that going to be enough? Is it going to be enough to continue these great iPhone sales? I mean, from everything we're hearing, demand's probably low, although Apple hasn't announced it yet because they haven't needed to. It's probably pretty low. Nevertheless, we saw a stock jump. So the new iPhone came out on the 20th of this month, but going from the 17, we were at 215 on the stock valuation, and if we go up to release date, let's see here, we were up to 230, so a $15 increase in the price. And I mean, is that justified? I don't think so. I think Apple's about to have an incredibly lackluster quarter. Honestly, I don't think it's going to be anything incredible, and people are going to see declining iPhone sales and be like, well, does Apple still have their touch? And the answer probably isn't no. You can only innovate so much within 2 decades of releasing phones. But I think Apple's going to shift more to focusing on their software and the App Store and generating money from that. All that's to be seen, and I think Apple is the person that needs to figure out that answer just to be able to keep their stock alive, especially as the most valued company on the stock market right now. A lot of focus is on them. Another company that had something interesting this month was Nike. And we're going to go a little further out on the chart. Maybe we can see this better. Yeah, there we go. Okay. So Nike announced that they're firing their past CEO, their ex-COO, and they have a new one. So the new CEO is someone that's worked in Nike for decades in all the departments. And the old CEO is someone that didn't have experience with Nike, but they were really good when it came to cloud computing and trying to fix the point of sale when it came to Nike to generate more profit for all their lines. But that isn't what Nike needed. And we saw, I mean, the stock's just been absolutely hammered. You can go out 5 months. 5 months, there's no growth. You're down about 5%. Like, that's just ridiculous. No one wants to be down 5% over 5 years. Kind of makes you think about what the company can do. However, if we look in the past month, we have had an 8% growth in the company. So we were at, let's see, about minus 0.8% on the stock for the month. The news came, we jumped 5% in the stock the moment the news came out. The moment they announced they had a new CEO coming in, everyone realized, hey, maybe this is a turning point for Nike. They'll get their stuff together and hopefully stop bleeding their market share to all these new companies that came in. I don't know if Nike will turn it around. Honestly, they've positioned themselves in a really, really bad spot. But having focused on what made Nike Nike and special, might be able to turn the stock around. Now, the last one I want to talk about was CrowdStrike. And this is something I mentioned in my last video regarding CrowdStrike. And we'll look at the chart, and I think this speaks for itself. I thought CrowdStrike was a value play. They had that major worldwide outage where they crashed a bunch of Microsoft computers. Not the smartest thing of them to do, definitely. I don't think it was intended, but it happened, and their stock went from 377 and dropped to low 200s. And that's just an incredible drop. You got to think, is it warranted? And I was arguing no. And I said, hey, I might actually look at buying a little bit of a crowd position because I think it's probably valued around 300 at least. I mean, we're up in the upper 300s, and then this one-off event happened, and they learned from it. And honestly, I did put my money where my mouth was. However, it recovered very fast. So I was putting extra bonus money from Robinhood that they match you and some cash back for my cards. And although it was slow, I was building up a position slowly of crowd. And I was thinking, hey, maybe this will be a position I hold for 3-4 months until it gets back to 300 and sell. I thought I was getting in at a good buy price, and I was. So I had about maybe $20 of a position because I was just starting it for like a week maybe. And then it hit the price of 300. Just like I said, if it hits 300, I'm going to sell. And I only had 20 bucks, but it hit 300, so I sold. And I had like 10% in like a week or two. I don't even know. But it grew just incredibly fast. I mean, we can see beginning of September, we were at 240, and it went all the way to 300. That's a 20% increase in stock price. And I simply didn't know anything beyond the valuation of that, so I sold out of my position. Maybe I shouldn't have, maybe I should have, but seems like I sold at the peak of it, lucky enough. So I guess we'll take our position where we can get it. But I mean, beyond that, it's just been an interesting month in the market. And I don't know, become worried when things are going so good. Everything's just going nice. I mean, we look, since May, I'm up 9% of the portfolio. That's $1,300 just about, and that feels pretty good to put in your pocket. So we're doing pretty good. I got an announcement that I received my job offer for after college, and that's going to significantly up my pay. So I plan on maxing out my Roth IRA as long as I don't botch my last year and fail to graduate. So the Roth IRA has some really big news coming up. I think we're going to make a lot of deposits, and I do want to, after I graduate, to start moving away from just funds. I want to be mainly funds, maybe a 70-30 split, but I love to learn. I love to be analytical. So when I give my hat in the ring when it comes to stocks and try to pick out some, which I think is going to make the videos a lot more interesting, and instead of just talking about ETFs and simply buying into the market, dollar cost averaging, there's a lot of value plays out there, and things like Nike and CrowdStrike show us that you can find value in the market, especially when you're looking where other people aren't. No one wanted to touch CrowdStrike with a 9-foot pole. Well, I don't see NVIDIA returning 10% in 2 weeks. That's all I'm saying. So I guess that's my little tangent for the end of the video, but I think a lot of fun things are coming up with this Roth IRA. Very excited, and I'll see you guys at the end of next month. So thank you for watching. Make sure to like, subscribe, share the video, watch the video again. I'd appreciate that, but take care in the meantime.